Buddy, it's Fausto Pugliese back on another episode here live on the Cyber Traders podcast. And I have Jarratt here. Looking forward to having him here. We're going to talk a little bit about the markets, talk a little bit about the Forex market, talk about stocks, talk about what's happening, how to prepare these great markets. Jarratt, welcome to the show. Good to see you. Welcome.
Thank you. Thanks for having me.
Where are you logged in from anyway?
UK. So central, right in the middle of the UK, basically.
Okay. How's everything's safe over there? You're not dealing with all the headaches we got going over here?
It's sunny, and that's the main thing. That's the main thing I look forward to. It's nice weather, so yeah, it's all good here.
Yeah, we're here in New York, and we have been raining for the past 8 weeks. I think tomorrow, finally, summer is going to arrive. And what's interesting here, I was trying to tell everyone even about the market, is that, you know, I live here on Long Island. I don't know if you're familiar with the area, but everyone goes to this Hamptons area where they got these billionaires, and it's probably the first summer they're going to really enjoy. I was out there last week. I was at like one of the best, most famous places in town, and nobody was there, you know, so it's going to be pretty exciting. But as the market goes, the market's closed tomorrow, and then Friday probably be a more slow day, obviously. And then obviously 4th of July comes up. But regarding that, regarding about the UK, what have you been doing now? What have you been seeing differently as the market goes? I know you're an expert. What, in Forex is it again?
Well, yeah. So I used to be FX, and then I kind of transitioned to stocks, basically. So now I do stocks, but my first business was FX. Yeah.
And then what made you do that? Because, you know, I'm glad you brought that up, because there's always people like, they're always transitioning to something else, you know, and they try something and they try it and then they just say quit and they go back to your day job. What made you transition from one to the other?
So really with FX, it's kind of very intense. So the way I did it, I was kind of a fundamental trader. So I would basically be up really early, probably at the screens like 15 hours a day, watching the news, waiting for breaking news, trading sentiment. And I did that for like 10 years and it just got really tiring. You know, I was just like, it's got to be a better way to live. So I kind of wanted to switch to something a bit more slower paced, basically. That was one of the main reasons. The other reason was it was kind of a bit. I don't know if you remember this, but in 2015 there was an event where the central bank of the Swiss National Bank, they pulled the plug on the currency floor on the Euro Swiss pair, and that caused chaos in the market. I mean, that was the thing that made FXCM, the big broker, they kind of went almost bust. They had to got bailed out. Loads of hedge funds went bust. A lot of people went under in that, and that kind of was a lesson to me. Is like, you know what? I've spent like so many years building my business on this. If I was in that trade, I'd have lost all my money. I'd have lost all my clients' money. So I was like, you know what? I need to try and find something a bit less kind of, a bit more stable, let's say. So that's why I kind of like looked for something else. And I ended up in stocks, basically.
Are you talking about when the franc crashed that time?
Euro Swiss, yeah. That was because
I remember that very clearly. First of all, that was an anomaly. I mean, that was like the Forex. That's like the stock market going from like 40,000 down to like 10,000.
Yeah,
I mean, that's like that was
crazy. Yeah. And I was managing money that day, right? And I was that close because that trade was so like. Because the bank were just protecting the floor, you could literally just buy, you know, the market wanted to sell it, but the bank wouldn't let it go down. So it was like easy money. Like you just buy the little dips and it was just like guaranteed money. So I was so close to being in that trade. And if I'd have gotten, even with a tiny bit of leverage, literally I'd have been wiped out on that move. And that's kind of one of the reasons why I was like, you know, I need to kind of do something a little bit more as I get older.
And let's kind of educate people a little bit more about that, because that could happen, and it does happen, and there's always catastrophes. But basically, you know, what he's talking about is that back then there was this big. First of all, I don't even know why the Forex market, because I wasn't trading it, but I know a lot of people here. FXCM was actually not too far from me. I know, so the owners don't live too far from my house too here that own the company too. I mean, being in New York, but yeah, you had this big correction in the Forex market, and the problem with the Forex market is that they give you so much leverage, right? They give you so much buying power. It was like, well, they were giving people like 50, 100 times, you know, of the leverage.
More actually, yeah.
It was even more than that, right?
Yeah, I mean, you could get like 400 times, 500 times in some places, yeah.
So think about that. You have $1,000 in an account, right? You get 500 times. That means you got $50,000 in buying power. Is that right?
500,000, yeah, 500,000.
500,000.
Yeah, 500, yeah.
I mean, like, so listen, it's a great gamble. You know,
I mean, it's good if it goes your way, right? It's
if it
good
goes your
your
way.
way. Yeah.
Yeah, but what's the worst thing that can happen? You lose $1,000, but who takes the hit of the other 499,000?
Yeah. Well, the thing is, the problem with that was that like the brokers didn't have
Stops.
well, you'd have had a stop, but the brokers literally went bust, right? Because the liquidity providers were like, well, calling it in, there's just nothing on the other side because it was just everything just went. So you could have all the stop losses you want, but if the broker, or not even the broker, but the liquidity provider has gone bust, like who's going to honor your stop? There's no one around. Like you said, basically your money's gone. And that was the big problem with that. It was just such a catastrophic event. It just kind of showed me that really, ultimately, if everyone's on the other side has gone bust, then there's no protection anyway, you know. So that was, I mean, it was like you said, it was a bit of an anomaly, but it just was like I don't really want to be at that risk of that happening to me again. Basically, it was so that was the kind of the straw that broke the camel's back.
You know, it's funny. I have so many people that come on this show, and we talk about one of the big things we always like talking about because this is how you learn. You know, you learn from if you could survive a catastrophe. You just basically just won half the battle, and that's how you win the war and have a career in trading. And like you witnessed one of it, and it's always great to talk to someone about that. And I'm actually planning on having one of these CEOs on the company back from then to talk a little about that because of it is very educational, everyone should know about it. And they're not bad people. It's just it just happens. You know what I mean? But getting back to you a little bit more, so you've survived it. You didn't trade it, thank God.
No, I
So
didn't.
yeah, because you wouldn't be here today, right? You'd probably be probably working back at McDonald's or something like that or whatever.
Yeah.
But so you transitioned, now you got into stocks, right?
Yeah.
Now, what made you, was that the nail in the coffin that made you convert, or just felt like, it's not? Because there are people in here, they get, you know what it is, Chad, they get involved and they're like, they want to do futures. And then they're like, because they sold that this is the greatest things in sliced bread, or options because the leverage and this and that. What made you convert?
Listen, when you're new to day trading, right? It's the greatest thing in the world because it's just you and your computer. You can make, there's no cap on what you can make theoretically. It's really appealing, but when you've been doing it for 10 years and it's kind of like that's the normal way, it does get really tiring because you have got to sit at that screen and pour all your energy into that every day. And if you don't, if you stop making money because you need to be trading. That's how it works. So it's not like something's compounding away in the background. It's like you've got to be constantly on it. So that was the big one, really. But then that S&B issue, that, the thing that happened, that was like the nail in the coffin. It was like, this is now the time to kind of look for something else. So yeah, like it's great, but that was kind of the reason why I decided I wanted to kind of move to something a little bit different, basically.
And when did that transition happen? When did you realize that?
Yeah, so that was like 2015. So that happened in 2015, the S&B 2015 and obviously it probably took me a couple of years because I obviously had whole businesses around it, right? So I had a training and education business at that time. I had a managed account business at that time. So it took like a few years to unwind all that. So basically by the time I ended up retiring from FX, it was like 2018. So it took like 2 or 3 years to kind of transition over. And that's kind of how it went. But I didn't go straight into stocks. What I decided I want to do is I wanted to kind of basically buy and sell businesses. I wanted to be investing in businesses. So I initially started doing that in the real world, the small businesses. And it was like a couple of years after that I transitioned into doing it through stocks, basically.
So what are you doing in the stock market now? Because there's so many ways to trade in the market. Are you day trading? Are you buying? Are you doing psychology? I mean, what is your strategy behind now that you got into where you left the Forex market to equities?
So what I'm doing right now is it's very much it is trading, right? I'm flipping stocks, but it's not day trading. It takes a lot longer to play out. So what I'm doing is I'm just looking. It's kind of the old deep value kind of, Benjamin Graham, all that stuff that sounds really boring and dusty. But when you actually do it, you are actually trading stocks. So you're looking for a stock that's trading well below what it's worth. You buy it, the stock pops, you double, you triple your money, you flip it, you put your money back into the next one. So it's the same process as a day trading, but it's a very, very slow motion and much more relaxed, basically.
So you do more of a swing trade on the stock and more.
Yeah, it's more like, like, I mean, so, like I've had stocks that have popped in like a month, but I've had other stocks that I've held for like 2 years. So as the portfolio, there's always something going on in your portfolio. But yeah, it's kind of it's dynamic, but it's kind of, who knows how long it's going to take, but it's kind of somewhere in between that kind of couple of weeks to kind of 2 years kind of level. Yeah, but that's what you're doing basically. You're just trying to flip stocks.
So how did you find this specific style? Did you try a bunch of styles and learn from different people, or just say, you know what, and like, what made you transition to this? Because there are a lot of people listening in here, and they're like I'm a day trader, and
Yeah.
I was born and
I used
raised
to
as
be.
a day
That was
trader.
me. Yeah, that was
Yeah.
me. I was a day trader. I just basically was like, after that whole experience, I was like, I can't lose money, right? So whatever I have to do, whatever I'm going to do, I do not like losing all my money has to be like a no-go. It's never going to happen. So that was the kind of the starting point. And as soon as you do that, you get to that point, then that automatically disqualifies a whole load of other stuff, right? Because like you say, things like leverage and futures and all those things have the potential with one trade or two trades to wipe you out in the right scenario. So that was the first thing. Get rid of all that. Once that's gone, then you're only left with, then you're kind of left with, okay, now I can't lose money. Now I want to make the most money possible, right? And then that then kind of disqualifies things because, so for example, you could just invest in the S&P 500, but that thing's always really kind of priced at the upper ceiling of its value, right? 20 times earnings, 30 times earnings. So overall, you might have a good year last year, but you're not going to make 20% every year doing that. So then you kind of narrow it down again. And really, the only thing that was left basically after that was kind of deep value investing. Basically, that was what was left. You get the big upside. You can outperform most other things, whilst absolutely having no chance of losing all your money. That was pretty much the process.
So could you walk us through a step-by-step process of how do you go through your day-to-day decisions, on, rolling from, using the data you use versus the introduction play?
Yeah, so really what you're looking for is so it's bottom up, right? So you're not, so with FX you're kind of top down. So you look at like macro, you look at news, you look at, you go down, and then try and find the currency that's the best one to trade. Whereas with deep value stocks, it's the other way around. So you're not really interested in macro. That doesn't matter. What matters is you want to find a stock you just give you a simple example. You want to find a business that's got $100 million in cash with no debt, but you can buy that whole business for like 50 million, right? So it's clearly a stupid pricing because $100 million is not worth 50%. 100 million is worth 100 million in cash, right? But the market will price it sometimes less, like half. When you find those obvious mispricings, that's what you're looking for. And then you just weigh them up and you say, okay, then you sort of go back up to the top. You're like, okay, so what's the business quality like? Is this thing about to go bankrupt? Is there a really good reason why it's priced like that? Now you go up to the next level and make macro and kind of set economy and sector. Is the sector going to get killed? Maybe it's going to get crushed. Maybe if it's a bookshop, when Amazon was there, maybe that industry is going to die. Maybe there's a reason. And so basically you kind of go up your filters. And then once you realize that actually it's a pretty decent business, it's priced absurdly low, there's nothing going to kill it. It's just chunking out cash. That's the kind of thing you're looking for basically. And then you'll just put some money into that.
So how do you go about finding that data? I mean, so how do you know what industries or whatever, listen, what industries have you worked on that did well for you and did bad for you? And what are you looking forward to going into the future right now? I mean, what's moving, especially with the war going on, with everything going on, Iran and all that good stuff, bad stuff, whatever you want to call it. But
yeah, well, so the macro stuff does impact the sector. So for example, the war in Ukraine, right, cause like the whole, obviously any stock with any kind of business activity in Ukraine went through the floor, whether or not really that was rational, right? So you might have a company, I've got a stock that's it's a mining stock. It's got mines in Ukraine, but they're not really anywhere near the war zone. But just the fact it's in Ukraine, everything goes down. So that's obviously one thing to watch for.
What stock is that?
It's called Forex Crash. It's a mining stock, but that's priced like, yeah.
There are a lot of mining stocks though.
Yeah, you got to be careful with mining stocks because a lot of them have a lot of debt. You got to make sure that the business is not going to die, basically. But yeah, mining's one. Another one, after 2022, interest rates went up, so financial stocks kind of went down because people aren't going to trade or invest if they can just put it in the bank and get 5%, 6%. So that really hit financials. Investment stock brokers, for example, a lot of FX brokers. The first stock I invested into in 2023. When I was looking in 2023 for some more stocks, the first one I found in that year was an FX broker, and that was trading at less than the value of its cash. but I knew that broker because I'd traded with them, right? So I knew they were a good business. They were a cash flowing business. They made tons of money, but the market just had this view that interest rates up, financial stocks go down, and you just snapped up absolute bargains. And that's tripled since. But
Jarratt, let me ask you this, because it seems like you're really doing your research on the financials and the P ratio on these companies, the book value. But don't you find that if there's no demand on it, I mean, there are companies out there that have great financials, but if there's no volume, nobody trades them. And then there's these things are like, my God, this company's losing money. It's getting crushed. I mean, like, how is the stock doing? As a day trader, that's what we always look at. And like, people like the action. I mean, are you just more of a patient trader and know that eventually it's going to catch on? Or do
you know what I'll say? I think there's a big misconception here, because what I would say is that what I do sounds really boring and slow. But there's a magical kind of there's a magical realization of where, when you look at an individual stock like that, you're like, where's the catalyst? What's gonna happen? It's not going. There's no volume, right? But when you have a portfolio of them, right, the dynamic totally changes, and it's the performance of the portfolio that is the magic, not the performance of individual stock. And the performance of a portfolio of cheap stocks is so consistent, and it's so like, it's plenty of action for me, right? And if you want more action, you just have more stocks in your portfolio, and the more stocks you have, there's always one that's going to be doubling or tripling or popping off. So you're always going to be doing something. So I would say that's a really big misconception. It's probably not a good thing to say, because I don't necessarily particularly want everyone else to be doing it, but that's kind of one of the things why reason most people don't do it, is because they have this perception it's a bit boring. But if you actually build a portfolio, it's quite a lot of action going on, right, in that portfolio.
And how big of a portfolio should you be in? Because there's another, like, I always have people ask me. I have some people have like 50 positions. I mean, what is a normal, portfolio position? In dollar amount really doesn't really matter, because people say, well, I got more money, I could buy more stock. I'm like, no, you just, because you can't manage 50, 100 stocks. So what's a good portfolio? And when do you admit when you're wrong? Because you're not right every time. None of us are. So when you cut the tie, and what do you look for? So two questions I have for you.
Yeah. So, I mean, there's two ways you can do. So if you want to make the most money, in my opinion, you have a smaller portfolio. So I would say 10 is probably the minimum. Between 10 and 20, right, is a nice amount.
Okay.
And if you keep to that, you're going to have a nice little portfolio that you'll have more volatility, right? But overall, you're going to make more money, because what you'll be doing is you'll be putting your money into the best ideas, which have a higher chance of paying out, right, making money. Good companies, etc.
Okay.
If you want more action, right, if you've got itchy trigger fingers, then but you still don't want to lose, and you still want to make consistent money, then you have more stocks. You could have like 30 stocks, 50 stocks. I mean, there's a famous guy who had like 100 stocks, and he would say that his average turnover was like 4 years, right, per stock, which sounds ridiculously long time. But when you actually work it out, there was a stock popping off every 2 weeks on average, just because of the number of stocks he had, right? And if you do the math, it's like every 2 weeks there's a stock popping off, which it's quite a lot of action, relatively speaking, if you're doubling your money. So it depends which way you want to go. So you can have the more stocks you want if you want more action. If you don't care about the action and you want to make the most money, then I'd go for a smaller portfolio. That's what I do. I'm a smaller portfolio kind of guy.
And when do you cut your losses? Like, let's say the stock's not going anywhere. When do you look at your portfolio and say, you know what, time to take that cash, move it to somebody else? Because listen, a lot of people have these dogs in their portfolio, and they just sit there and they just basically just nurse it and nurse it and nurse it. I'm like, listen, you got to go to a different flavor. You're boring. You know what I mean? It's not going anywhere, Yeah. And then it's seeing all these other things that are running up, like I don't know, like maybe you get an opportunity, like Tesla got crushed. You know what I mean? I'm like, it's like, I can't sell it because I've been nursing this thing forever. When you cut your losses? So
in deep value, it's really simple, because you can, it's much easier to work out how much a business is worth, right? So to keep it super simple, you've got the tangible book value, which is the liquidation value of the business. So that is, how much is this business worth if it liquidated tomorrow? Really simple to calculate. And every quarter, the company releases financial statements. So if the financials are deteriorating that business, and suddenly, the value of that business is now kind of at the price you paid or below it or above it because the assets have deteriorated, for example, you can just get out, right? You say it's not cheap anymore, right? It's the price has moved, the value of the business has moved compared to the price. So that's a really simple way to do it. You value it, you look at the price, you want a massive difference. So you're going to double, triple your money between the two. You don't want to like a 10% difference. You want like 100, 200, 400% difference, right?
Right.
And you just track that, right? Every quarter it comes out. It's like, how's the value now? Like I've got a stock that I'm holding that's just gone up in value, right? So I'm like, okay, I was just about to cash out, but now there's another 50% upside because the business has become more valuable. So that's fine. I'll just hold that longer, right? That's it. It's quite simple.
Now, how do you help professional investors transition into the equity partners in a fund?
Well, so I mean, it's kind of there's I guess there's an element of education to it, but really, I mean, that game's all about performance. Like,
okay,
you know, if you're not beating this, if you're not beating something that they can get in Vanguard, right, or BlackRock, then what's the point? There's no point because they're, especially after fees. So you've got to kind of basically, it's just all about the performance. So I mean, the big benchmark is the S&P 500, right? Everyone's obsessed with that. So that's really, if you're beating that consistently, that then gets people interested. And the other thing that really works is you make money for someone, they're going to refer people. That's what happens. Like they refer people, and when people have been referred, you know, it's a lot easier to kind of convert people and make that transition over. And that generally tends to how it goes, really.
Okay.
Rather than any kind of big effort on my part, it's just all about doing what you do, making money, basically.
Actually, Samuel on YouTube has a question for you, and he wants to know: do you sell upside calls against your stocks?
I don't know. I just keep it super simple, no stress. Try and reduce the workload and just hold the portfolio, right? And the portfolio does all the work. So you'll get like, because if you're buying really below the intrinsic value of the business, that's a downside protection. So, for example, when the Trump tariffs kicked off, right, markets went crazy, S&P dumped.
Yeah. That was
right. I'm sure you had a great time in that, right?
I actually got crushed, not bad, but I also killed it at the end. I was trying to find the bottom, like anything else. You know what I mean? And the worst thing that happened to me, I'll tell you this, Jarratt. I tell everyone, don't do this, okay? But don't go away on vacation long, okay?
Yeah.
And because, you know, when you're not there watching it, and unfortunately, like I was, you know, market was doing well and everything else, and here, you know, here in America, you hear Liberation Day, you know, like whatever, and all of a sudden, but the market looks different, and I'm in Aruba right now, like on my son's graduation, you know, it's school graduation with them, and I'm watching the market. I'm down like, you know, 10 grand, 15 grand every day, 20 grand. I'm like, my wife's looking at me like, this is like the most expensive trip we ever been on. You know what I mean? Yeah. And I'm like, I know. She's like, well, what are you doing? I'm like, what am I supposed to do? Stop drinking, hanging out in the cabana, or should I go there to my trade? I'm going to be gone. Yeah. And I'm like, and it just wouldn't stop. It wouldn't stop bleeding. And, but yeah, I mean, I made it all back plus some. I mean, I doubled down. And when it was a great rally when it came down to it. But these opportunities, you got to be prepared for it, you know, when it comes to that.
I mean, the VIX hit 50. I mean, it's crazy when you look at the VIX and that hits 50. I mean, that
was crazy.
It's just like, it's like going to the Grand Canyon for the first time. You just can't, there's no words to describe it. It's just
looking around. Like,
yeah, you're just looking at it. I'm just looking at the VIX.
Like, is this for real? Or is that like, I ain't dreaming?
Going on here, yeah.
You know? But that's so that basically comes out. So now regarding about what you do, Jarratt, a question I also came up, students asked me, what's your advice to give traders looking to evolve into investing, to an investor?
You know, if you want to do deep value, right? If you kind of appeals to you and you it's just to basically, the thing is, you know, the reason is I don't think a lot of people, there's not a lot of like noise around it is because it's so simple, right? It's hard to kind of build a course on it because it's just really simple. Like you just buy something for less than the value of its cash, for example. That's just, you know, so just start looking, basically. Just look at stocks, get past the big ones, get past all the big ones that the top stocks and all that, and just start looking at all the businesses in America or worldwide, and just looking at the difference between things like market cap and, you know, the cash in the bank, or market cap and book value, and just start looking at those ones that look a lot cheaper. and just that's it really. It's quite quantitative. You haven't got to be particularly clever. And the second piece of advice is just, even if it's a paper portfolio, just find figure out a way that you think is a good way to do it. So tangible book value is a really simple one. Just build a portfolio and watch it for 6 months. Right, you'll see how consistent it is. You'll see how it kind of does all the work for you. I think once you've experienced that, you won't go back. But that's probably my advice for someone who wants to have a little dabble.
Well, with that said, then this has like been a really popular question. It's been coming up on all our events and everything else. AI, right? So where do you see the future of active fund management heading, especially with the rise of AI and robo advisors? I mean, where does that put you and everybody else? I mean, how do you deal with that?
Yeah, I mean, I don't know, really. I mean, I use AI a lot in my. I mean, AI has helped me a lot in my process. Right, it saves me so much time now, and the things you can do with it are incredible. But I mean, going forward, I think there's a good argument to say that there won't be many jobs around in the next 20 years because
20 years, in the next 5.
If AI can do everything better than a person, who needs a person, right? Who wants a person and have to pay and all that? And you can just have a robot doing it. Investment, I think probably. I mean, if I had to guess, maybe it would all kind of. The one thought I have on this is because investing is so regulated, right?
Right.
It would probably, my likely end point is that everything will kind of amalgamate towards a more passive indexing type thing. Like you won't have the AIs running off making all these crazy trades. It will kind of, everything will just kind of conglomerate around just passive indexing, which is a little bit boring, which in itself would probably still open up a lot of opportunities for active traders, right? I think you could probably program an AI to follow an active strategy. But yeah, I think the inclination of the society as a whole, because of that regulation, will probably protect active investors a little bit more, I would say, maybe.
Yeah, I totally agree with you. I think people don't realize it because that's a concern. It's the regulation that's going to stop most of it, and they have to keep control of that because, listen, AI is not stupid. You know what I mean? And it will rewrite its code. And if it knows that you're trying to shut it down, there was already some arguments just recently saying that some people, some engineers basically try to shut it down, and the AI tried to rewrite its script so it couldn't. You know what I mean? Like, talking about Skynet, Terminator. So it can happen, but and you really have to. Like replacing jobs, I understand. And listen, people writing their emails through it. People are, doing research and news. You don't have to pay for it anymore. But when it comes to trading, though, and regulation, you're not going to let some robot do it because, and because then what ends up happening, you're going to have AIs versus AIs and AIs versus AIs.
And also, where's the accountability, right? If you lost all your pension, who's to blame for that? Oh, it's the AI. You can't. That's not acceptable, right? So you can't. There's always going to have to, because of the regulation. I think there's always going to be that kind of human element. And that kind of, it's not going to be as hands-off as something like maybe self-driving cars will be. It's just because of that, for that reason, I'd say.
Well, listen, you know what? I'm glad you brought that up because I don't know if you remember a company called Knight Securities a long time ago. I'll never forget the time where the big thing was black boxes, okay? And they had automated trading, and the system just basically went out there, and then they turned it on, and they couldn't shut it off. And it was actually doing the opposite, and it lost them about $500 million in less than 30 minutes. It just totally destroyed it. It was a great trading day for us as traders because we made a ton of money trading Knight. You know what I mean? But then they had to sell the company because it went bankrupt. Who do you hold responsible? And it wasn't the investors. It was, obviously stockholders, but it wasn't trading like your and I money. It was actually, trading the trading accounts money. It was trying to replace traders, to be monitored. And I think that's the only problem I think everyone could agree with AI. It has no feelings. It can't think, and have, compassion, whatever. So that's the only thing that will affect it. And like you said, who's going to blame it? And they got to keep the regulators. But with that, so what are you seeing in the future going on right now in investing, as in what should people be looking at and should be focused on regarding now we got this new war that's going on and all the BS that's happening?
At the moment,
or we should stay away from too.
Well, it's just impossible to kind of know. Like you say, liberation, 1 minute's Liberation Day, everyone's dancing in the streets. Next minute, the market's bleeding and everyone's panicking. It's just like, you just don't know what's going to happen next, right? Because everything's so uncertain. you know, who, I mean, I couldn't believe that all this, what's kicking off right now in Iran and Israel, but that just kind of seemed to happen overnight out of nowhere, you know, like they're basically at war. And it's just like, I don't think you can, I think basically you really just be reactionary. Like if you see something that's going to impact you, you need to kind of just be there to react.
Anything you're a fan of, like anything or things you stay away from?
I mean, yeah, I mean, for me, I just kind of look for the cheapest possible stocks because that gives you the downside protection. So when the tariff Trump thing was kicking off, the portfolio didn't really move that much to the downside. We had a bit of drawdown, but it wasn't nowhere near what was going on in the markets because it's kind of already at the bottom, basically, of their valuation. So that kind of thing protects me a little bit. In terms of what to avoid, I mean, I guess I mean, who knows? Honestly, who knows what's going to happen? And what do you guys? Obviously, you're a bit more active in the day trading side. Are you just guys focused on the reacting as to things as
Well, we're
they
seeing
happen?
what's happening like right now. Like some military stocks are moving, but then there is like like today, we're finding a lot of like mining stocks that are moving to or energy stocks that are moving. You had all the SMR that did great. You had OKLL that moved up great. All these nuclear stocks that were doing really well. I mean, everyone's always focusing on the fabulous sevens, but I don't know, we were seeing a very big pop in those. And then, but then there's some weird ones that just come out of nowhere. You had all the quantum stocks, you had the Rigetti, and you had the QUBT, even, and then you get these weird ones like Reddit made a pop. I mean, just recently, I don't know. And it kind of popped when the market came out, but it was more AI driven. So I don't know. I mean, like, we have one stock that's moving pretty well too that we were watching. What was it? ASTS? What's it doing right now? ASTS. Yeah, that one was hovering just around 25. It's almost at 45. After what happened with Elon Musk with the internet and space and stuff like that he runs. They're also one of big competitors. So that's coming into effect. I mean, there's I don't know. It's like every day there's like something going on.
Yeah,
but
I mean,
I'm not really seeing that much.
Yeah, I mean, you know what? I think you reminded me there is quantum, like the quantum computing thing, because I was reading about that recently, and like, I think that could be a massive thing in the future.
So is the nuclear stock, and I'm a big fan of nuclear. I mean, but they're talking about 5-10 years that they're with their valuation. Their valuation is like right now they're booked at the P ratio is off the charts. You know what I mean? For where they're trading at, but you look what they went up. Samuel also is just big on like Palantir, but another one. I mean, that's obviously been a really good war stock, but then there's also other things behind it. They're trying to like track everybody what we're doing in our lives to Palantir. I mean, that guy's like, pretty scary.
A bit scary when you look too deeply. Yeah.
Yeah. So regarding about just, like I said, we're almost out of time here too, but just a couple of things I just want to touch upon with you, because I know you've been doing this, Jarratt, for a while. What are the most common mistakes that investors make when managing capital that they should be aware of, that you've made, that you want to let them know not to make the same mistakes?
Yeah, I mean, if you're managing money, I mean, I've managed money since like 2008. And I would say, really, I would say emotions. Like if you're an emotional trader, then managing money is only going to make that like 1,000 times worse, because
you can't take a Klonopin for that.
You what? Sorry?
Can't take a Klonopin for that, or
yeah, maybe. Maybe that's it. But like, you need to be really careful about it, because then once there's the money on the line, then it gets stressful, right? So that, going back to the S&B time, we had clients, the phone, like everything was just blowing up all around me. What's going on? What are you doing? How's this? And it's just like, I was like, man, if I was in that thing, the stress would be through the roof. I mean, it was stressful anyway. Like, so yeah, just from an emotional perspective, I would say before you make that decision, really work out whether you can kind of cope with that kind of stress and emotion.
Is that because you're probably just over leveraged, or just?
It's just, I mean, for me, it was just the responsibility of managing other people's money, right? Like, I know it sounds a bit crazy, but if you lose your own money, it's kind of like, your wife might shout at you, but if you lose other people's money, or it's their retirement account, like, it's just, you don't really want that it's just a different dynamic for me anyway. It's just a totally different dynamic. You don't really want that that kind of stress. So I'd say you need to really think that through carefully. If that doesn't bother you and you're like, meh, whatever, that's fine. But that's the big one for me. You just really think about that. And if you can cope with that, then you'll make a lot of money.
I totally agree with you. You know, people always ask me all the time. I've been day trading for 35 years, and people always ask me, "Hey, Fausto, just trade my money for me." I'm like, that's why I got into the education business. And I tell them, like, listen, I don't like, you know, because I take things personally. And if I lose someone else, but I feel like really, really bad. Some people have no morals, and they're like, big deal. You lost money. It's not my money. It's your money. You know, I didn't lose mine. I lost yours. So it's mine. I have like a guilty conscience. So so you're right. Like I'm not that right person. You know what I mean? That's why people always ask me, but I'll teach you how to think for yourself, you know, and we'll show you how to go out and do it. That's why, you know, what we do here different in Cyber Trade University, but there are people like you like that know how to deal with it. I'm just, you know, I was never that person. And then that's what you learn as a trader over the years. You know what I mean?
And that's important because, well, that can literally make the difference between your long-term career or not, right? Like, you know, if you'd have gone down the other path and found out that you were horrible at it and you'd end up like broke and bankrupt and getting sued, or, you know, like, or now you've got like a really successful, thriving business. Like everyone has to just make that decision. And the better decision you make, the more, you know, the better you'll end up being, basically, because if you make a bad decision, that can cost you for years. You know?
Yeah. Well, like I said, if you're, like you just said, if you can't personally deal with that stress, I was, you know,
or even if you just don't want it, like,
right.
you might be able to deal with it, but why would you want to deal with that? Like, it is quite stressful. Like, some people just don't want that in their life, do they? You know,
Jarratt, I say it all the time, and I'm glad you brought that up because you know what? That's what everyone has to understand. Like, if you can't handle it, you know, give it to someone else to do it. Like I tell everybody, like people want to learn to do what I do, and I said, listen, you want to learn how to do it? I'll teach you how to do it. But some people, let me try it. Let me see how it works out. I'm like, yeah, okay, good luck with you. You know what? Better off, don't do it. Go give it to a guy like Jarratt to deal with it for you because you end up blowing up your account. You know what I mean? Because you're not going to know, because like you just said, you're not going to know how to deal with the stress. You're not going to be able to deal with the psychology part about it. You know how to deal with it. You know what I mean? And, you know, I'm glad that's why I want to have you on. And I'm glad that we end this, you know, end it like this, because there are a lot of people here have to understand that if you want to do this on your own, Cyber Trade University is here to help you. If you don't want to learn how to do it on your own, then give it to somebody else like Jarratt. But the only reason why they don't like people like you, Jarratt, is like because you got to get paid for it, and they're like, okay, great. And I tell them, good, no problem. Then you go out and learn on your own and see what happens. See what that costs you.
Yeah, it's a fair point.
Yeah. You know, go. So, any last minute words that you could probably any advice that you give everybody what to expect in the future, or anything else that they should be prepared for, moving forward?
No, I think AI is the big one, isn't it? I think it's just the problem is just trying to predict how you want to get in, how you want to ride that wave. And, you know, trying to figure out what's going to be happening in 10 years. I mean, like you say, 5 years is, I think the world will be changing in 5 years, let alone 20 years. So that just makes things really hard. So I would say focus on what you enjoy and what you do best. So if that's day trading, do day trading. If you find that's not for you, don't do that. Just do that. Don't try and force something because you think that's what you should be doing. Probably the best advice I can give.
Yeah. All right. And by the way, if anybody wants to join Jarratt and wants to know a little bit more about it, we got a QR code up there. Take your phone, scan that QR code. We'll also post up his link to his website. If you want to know a little bit more about managed accounts and how he does it, go out there and check him out. We're going to have him come back again in a few months for one of the Cyber Expos. So you guys can listen a little bit more, and you can kind of do a little education course of how to kind of basically show you how to do it on your own if you want to see how it's being done and what his the stress he goes through, or otherwise just give it to him. You know what I mean? So thanks a lot, Jarratt, for being here. Appreciate it. And we will have this video up in the next few hours. We'll have some highlights of it. We'll have some shorts, and we'll have the long versions. Just make sure you like us, friend us, and subscribe to the channel. Jarratt, thank you so much for being here. Appreciate it. And look forward to having you back.